The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. And I'm just looking at, new things that are going on and where we're at. But right now, let's check out where the market is. And let's see, we got the S&P right now. It is up 11 points on the day, taking off right out of the gate there. And let's see here, what else we got? We have the Russell is currently up 10 points, the NASDAQ up 10, and the Dow up 110. So getting some consistency among the movements in the different markets. And across the indices, some of them have been going back and forth, not necessarily lining up as well lately. But we're actually going to see that lineup be a whole lot better. And then looking on over and checking out our metal markets, we got copper right now is down about 0.2%. We have gold is down a few dollars, and silver is down a little over 0.5% right now. Natural gas up over 1% on the day. Oil is pretty flat on the day, just down a few cents. And corn is up right now just a few ticks. Soybeans is currently down $1.75, so those are going to go in their whole middle rollover schedule coming up. Euro dollar currently is down 33 pips. We got Aussie dollar down 23. Pound dollar is down 32. Dollar franc's currently up 23 pips with the dollar CAD up 35. Dollar yen is up 3. Aussie yen is down 6 pips. Euro yen down 28. Pound yen down 15. And euro pound down 6 pips on the day. And that catches you up with pretty much all markets everywhere. Let's go ahead and now check out what we got coming up on our news. We do that each and every day. We talk about the news. We go into the news. And whether or not you're a news trader, you better be aware of the news, because the news will run you over like a bus if you don't know it's coming. Like I said, whether or not you want to trade it, you just better be aware of it. So this morning, what do we have happen? Well, we had somebody release some earnings, I heard, right? We had Walmart. So Walmart had their earnings release this morning. So let's pull up the Dow, and let's go in and see how that turned out. And pull up a couple charts on it, okay? So I'll grab this right here. We'll go in. Let me back some stuff off here. Some different measurements playing with. And we'll look at the Dow. And here we go. All right. So anyway, so they released their earnings report, and one of the things we can also do, I have a cool feature on Thinkorswim to actually show you the exact time. If you go in, you pull it up, of like the wire and the call. So we'll go to Walmart. We'll drop off time and sells and active trader here. And then we'll just drill down to like 5-minute or 1-minute bars. And they ought to show us. They updated. There they go. Yep. So right there, call and release pretty much at the same time. A little bit early this morning. Conference call started at 6. They released it at 6:02. And now they usually release, we're on the same time zone here. Yeah, they usually release at 8. So it looks like they were a little ahead of their game today on their release time. Anyway, so they put that out this morning, and I'll probably double check that just to make sure. But Central Time, so yeah, 7 o'clock. Yes, they were actually a little earlier on their release. But anyway, so that number came out, and the results, which are sort of nice because, like I said, you can just highlight on here. 1.592 estimate, 1.6 actual, so that was better as far as that earnings number. Of course, you got to look at forecast and where the revenue come from and all the other fun stuff they dig into. But anyway, so the release happened at the same time. We can go, put a side-by-side chart, and we can bring that one down. 1 minute bars, and we can go in and look at the Dow just side-by-side with it. And back it on up here to this morning. Make sure that we have our style set up to allow futures to show historical sessions. There we go. And then we can line them up. So right here we got pretty much, right there at 7 a.m. And then see the impact it had on the Dow at 7 a.m. Okay, so Walmart's moving down on, the earnings report, and the Dow goes with it. So it's sort of good to be able to see that pre-market data. You can see what's driving that down move on the Dow first thing in the morning. Now, that doesn't mean it's going to keep it there all day, right? So obviously. And then you can see, even with that, you still get a spike back up, and Walmart starts pulling on back up. It's not in positive territory from where it closed yesterday. The Dow is. Walmart isn't yet. But it did at least move up, and you can see, sort of a similar chain, and it just kept, Dow kept rising. But that definitely early morning drop was very, very Walmart driven. And so that's why I like to highlight those so you can be aware of them and so you don't get caught off guard. Looking on over at what else we had this morning, we had core CPI came in at expectations. Unemployment claims came in basically at expectations at 336 on expectation at 335. CPI month over month, medium impact came in at expectations. That's all at 830. So right here, we're not really seeing any kind of just major moves, but basically expectations was better than worse expectations. So the market liked that. We can go over, we can compare it maybe to an FX pair, like say the pound dollar, and see how do those expectations do. They gave the dollar some strength, but not just a massive move in and of itself, just on the pound dollar. But it's a little spike up, and then the dollar has been gaining some strength against a lot of the currency pairs ever since then. Like I said, it's not a trade that I usually trade and go for, because it's like a 20 or 30 pip move usually, and we got the exact same thing today. And then we had Philly Fed Manufacturing Index. That came in at 10 a.m. Came in much worse than expected at negative 6.3 on expectation at 9.2. That apparently didn't really seem to phase the market too much. You can see there was a little volatility right here. If we zoom in, right here on this area, the report came out. Got a little up and down action happening. But Philly Fed usually has about a 10 to 15 minute impact, and then it's over. And by impact, I don't mean consistently positive or negative. I just mean it has an impact. You'll see the market oscillate. A lot of times what you'll see is the market will turn around. But yeah, it oscillates, and then finally it actually does turn up, and that was sort of the turning point, is once that Philly Fed Manufacturing Index report came on out. We had natural gas and crude inventories both were released today. So we can check those out. Hop on over. Let's check out oil. And we'll also hop into natural gas. We'll look at both of those. Oil being pushed back because of the holiday on Monday. So the holiday's pushed back, then we have that report come out on Thursday. And let's see, what do we got here? On oil, let's break this down. Let's look at 10-minute bars. And again, 11 o'clock. Came in at 1 million on expectation of 2.1. Last number wasn't really revised at all. Usually they don't ever have. There's really not usually a revision on that number. It's a little lower than the inventory number last time. It's a little lower than the expectations of 2.1, but it's not so dramatic up or down that it should have just a insane impact. If we go look at it, let's see, the report came out right here at 11. And yeah, I mean, you got 40 cents up, 40 cents down, 40 cents up, 40 cents down. I mean, just really a whole lot of nothing happening on oil today based on that report that was released. Let me go over and look at the more liquid oil, the 414 contract. I'm on 314. And still pretty much the same net results. We got a little bit more move, like 50, 60 cents, but it was a little lower than expected. Oil rose, not a big surprise, but it shot down and then it rose back up. So, I mean, you're talking like up 30, down, maybe 50? So, I mean, there was a range in there, but there wasn't enough of a range to really straddle it, especially with the premium that's built in on oil, strangles, binaries, and straddle spreads. So, again, not just the most tradable trade among, all the different news trades that we can look at each and every day. Natural gas, let's check that one out. Let's see here. And then on natural gas, we're currently sitting on looks like the March contract. So, NG... 0314 or H4, depending upon what platform you're using. And inventories came out on natural gas pretty much right at expectations. Minus 250 on a minus 255 expectation of British thermal units. And right there at 1030. So we got a little pop, half deviation down. And then a fly back up, half deviation up. So we got a 1 deviation move off the news. But it was half down and then a 1 retracement back up to the high. And so respecting those deviation levels perfectly and staying within its normal ranges. No massive impact on the news. And basically just no big surprises there. Okay, well, that wraps up today's. Tonight we'll have some monetary policy meeting minutes coming out of Japan at 6:50, so be aware of that. That can have an impact on the market. And basically it's released about 30 to 50 days after they announced their interest rate. And it's just a detailed record of their meeting and what they're thinking and where they're going. So this will have an impact on the yen, all the yen pairs, on the dollar. As it goes into it, and that whole Ebonomics of I can't even say the word right now, but all the stuff that they're doing over there in Japan. So and let's check out Friday. What do we got? We got retail sales happening over in Britain. Okay, that is a trade I like. Okay, that's a trade I like. That's my trade. Okay, so retail sales over in Britain. Definitely a news tradable trade. A good chunk of the time, I'll actually see it move about 12:30 or 1. It'll start moving. And so it's one of those trades you really don't want to wait until like 4 o'clock to get in, or you're going to miss half the move. And so let me see here. Just make sure I'm looking at everything correctly for you. But and then the move can happen. I mean, it can happen fast. It can take a while, of course, like anything. But I'll walk through this trade a little bit more step by step with you. And once we wrap that up, I was going to talk to you about a little different idea of possibly looking at how to make your own cross-currency straddles. So stay there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, like I said, we were just looking at natural gas right there, and going through and just talking about the new trades. I said tomorrow, of course, was my favorite one, the pound retail sales trade, and we look at, basically a 70 pip average move. Not that you're going to get it every time, obviously. It usually does take some time to make its move, so I am looking at the 7 a.m. expiration. Every once in a while, it moves fast. A lot of times, it takes its time. And if the market was already moving in my direction before it, that's great. If it was moving against me, starts moving the other way, I can be a little bit cautious, maybe wanting to get out a little bit early at break even. Like, let's say it was moving down and then all of a sudden the market flew up. Then, I want to be aware of that. But a lot of times it'll just trend directly into your trade, which is pretty sweet. But if it trends directly into your trade, you're usually getting that 70 pip move between like midnight and 7. If it trends the opposite direction and comes back, you're probably getting about 50, okay? So, for instance, the market moves up and then moves back down, you're probably going to get a 50 pip move from the release. If the market moves up and then keeps going up, you're probably going to get your 70 pip move before 7 a.m. And so just make sure that your take profit of where the FX has to hit from when you got in, okay? Your take profit of whatever you bought and you sold, so you combine the buy side plus the sell side risk, and then you add in the opposite side on the side you're trying to take profit. So if I'm trying to take profit on the buy side, I'm going to have my total risk, buy and sell, plus my sell side risk, because I got to assume the sell side is going to lose, so I can net a 1-to-1 profit. So if I risk $30, $15 on my long, $15 on my short, then I need to make 30 net, which means I also need to cover the $15 loss on the short, so I need to make $45 net. So I go, okay, $45 on top of where I bought it. Well, if I bought it 15 pips above the market, that'd be 60 pips above where the actual FX is, and that's within a 70 pip expected move. So you start putting those pieces together. If you haven't, go back and watch some of my previous shows. I walk through that in very, very high-level detail. But you can go in there, and that ought to help you out as far as putting those pieces together. But you just want to know, like, that is the trade I'm focusing on out of all the other potential trades available. And it's probably one, I mean, I'm just looking at all of them right now. It doesn't make the biggest difference on waiting till 4:30, but I'd say out of about half of them, it will be the difference between you getting 1-to-1 or break even. So that's really where, that's why I like to put that trade on right around midnight. Okay, so that's a straddle, usually a straddle. You could do a strangle, usually a straddle that I'm looking for, and just making sure my take profit goal is within that 70 pip expected range. And again, if it moves up and then down, I'm probably only looking for a 50 pip move, so I'm going to adjust my take profit. If it moves up, it keeps moving up, I can adjust that, or just leave it on, and it works out. It's a cool trade. We did the same trade earlier this week and worked out perfectly. Just on a different pound report. It said core CPI, core retail sales on Canada. Trade I have looked at in the past, going into further detail, checking it out, and that's one of the things I've been looking at. As I'm really like digging into these charts and seeing, what should I expect out of these trades on a consistent basis. And I mean, it's like core CPI has been wretched. Very, very little consistent movement at all. I mean, sometimes we're talking 10, 12, 17 ticks, ticks of movement. 20 ticks, big move. We got a 70, 12, a 9, a 15. A 40. There are some big ones, but there's a lot of 10, 20, 30, 40 pip moves. Not really enough to trade the Canada CPI or retail sales numbers on. And I'm talking like for the entire day. I'm not even talking about just for the the moment. Let's see here. And then one of the new things that I'm adding in that I'm starting to work on, and I got another trader I'm working with that's helping me on this, is we're actually starting to look at Forex Day, or how to put this, government news patterns. So when a report comes out and you consistently see, 2 negative numbers, the market flies up, is there a certain point that it usually hits its high? Such as on the pound report. I'll talk about that when we get back. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so, there's a lot of little reports. Like, one of the things, I'll find is, there's certain things that happen over and over and over again when a news report comes out. So, I'm expanding this not only to have, like, straddles and strangles. We're going to get a lot more detailed on butterflies and all that. But I'm also starting to look at directional, like, when you can add in to a trade. In a certain direction, and I'm also looking at when you should expect the trade to basically be done and reverse. Okay? So, for instance, and some trades that may not be straddle or strangle may have a good reversal trade. The dollar CAD report that's going to, or the Canadian report that's going to come out with the retail sales and CPI comes out at 8:30. Well, one consistent thing I've noticed, and obviously not every time, but nothing is every time. Pretty much at 10 a.m. Eastern Time, whatever it's at will be an extreme, and it'll pull back by 3 o'clock. So that'd be a very simple, in the money, maybe a one strike. I don't know if I'd go that far, but maybe a one strike. But I'd probably do like in the money or right at the money, like $50. Reversal trade. You could even do an FX trade where you just put a stop like at the high. But like last time it ran up, and then it pulled back down. And so you could do like an at-the-money trade right at 10 a.m., just fading it. And we had positive core retail sales, positive retail sales, negative reversal deviation when that happened. Now, on the report before that, so that's, so I can go through a bunch of different reports. and analyze them with you. We can walk through it and you can sort of get the idea. But again, just we're talking about dollar CAD, the report that comes out tomorrow. What are some of the things that you could do with it that are a little bit different than the norm, because it's not really a straddle strangle type pair. How could we take advantage of it? And again, obviously nothing is always going to work or whatever, but the market's been moving down. We basically hit our extreme by 10 o'clock, and then we expect it by 3 o'clock to pull back from whatever it is. So that bar, it moved up. That high bar, I'd actually go short, and then it pulled on back. And now sometimes it can go against you. That's why I don't necessarily like using the FX to the stop loss. I'd rather use like either a spread or ideally even like an at the money trade. But just going for the 3 o'clock expiration, expecting that thing to drop on back down. It does, pulls back down on 123. Trade would have been profitable. If we go over and we look at the 10 a.m., market goes, market's going up, 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 spikes up, pulls on back down. So reversing that would have been profitable. If we go on over to 11:22, and I'm flipping through a lot of charts, they won't load fast enough on the screen there, but 11:22, 10 a.m., market's going down, 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 go the reverse direction, and that one should have been a close one. That would have been, it would have been a hairline close, depending upon exactly what strike you got, and maybe win, maybe loss. You're talking within ticks. Looking at 10:22 and 10 a.m. there. So definitely a profitable trade. You just fade that. It's been moving down. You fade it. You go long. If we go over to the date of 9/24 of last year, 10 o'clock becomes the peak high. Pulls on back. Would have been a profitable reversal trade. We go into 8/22. And looking at 10 o'clock, it actually pulls back down and then ends up higher at 3 o'clock. If we go down, we're looking at 7:23. Let's see, it goes down, 10 o'clock. Okay, closing down. And did not pull back. That trade would have not been profitable. So far we got one that was close and one that would have lost. Okay. Looking on over 6:21, 10 a.m. Okay, trade would have been profitable by fading that there after the run up. 5:22, market runs, let's see here, let's check it out. 10 o'clock, it actually has a spike down, and then, which is a great signal for the reversal there. So it spikes on down, we fade that, we go long, trade profitable. 4:23 of last year, market's moving down, 10 o'clock, and just after the big move down, you go long, and trade expires in the money profitable. 3:21, market goes down, flies up, 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 up at 10 a.m., go the opposite direction of the trend there, like all the others, and trade is profitable. And then 2:22. So basically we're looking at a year of data on this release, and market goes up, 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 spiking on up, pulls back and profitable. So out of 10 trades, we had one loser, one that was close, and 10 that would have been profitable trades. Very simple strategy. And and that's just, that's how the dollar CAD acts on a consistent basis when this report comes out for the day. It doesn't move enough to straddle or strangle, but that doesn't necessarily mean that it doesn't still have a consistent enough pattern that we can trade it. And as long as we can stack, probability, profitability, something in our favor, and that gives us a lot, So as far as what about probabilities in our favor, or profitability maybe, probabilities in our favor. We got 10, maybe 11 out of 12. Not bad at all. Okay, so probability check. Okay, now that's if you're doing the at the money or the in the money contract. Okay, so or if you're just going long or short the FX, I would have to say without a stop loss, but obviously you'd want to have some sort of stop. Every once in a while it's gonna, like there was the one that went against you, and you just don't want to get wiped out. But we could measure, how far, if you did use a stop loss, how far did it go against you? If you got in there right on the close of that bar. But so it went up, just going backwards from February last year. It went up about 5 ticks before it pulled it back after 10 o'clock there. Maybe not that much. Actually, no, but really, it really didn't go back at all, but I guess you could say you maybe have like a 5-tick variance. But all the way over to 3 o'clock, we got to move down of about 30, a little over 30 pips. So 30 pips, out of the money would have been profitable. How consistent is that? That's the one thing that we really don't expect. Let's see here, dollar CAD on the day before that it moved up pretty much 5 ticks against you before it pulled back. It's about a 5 to 10 tick stop loss. And then 3 o'clock. So looking at 1500. We got a low there, a pullback. Basically made 5 ticks. So that only only 5 ticks in the money. Now again, that doesn't mean a binary you can make quite a bit on just a tick. So it all depends upon where that tick is, but and where your strike is. But looking over, the other day I made on 0.05 on the S&P. I put a trade in on Friday. I went long, and like $64 risk, made over $900, and literally came down to 0.05, which isn't even a tick on the S&P for full profit on it. Let's see here, 10 o'clock. All right, looking at the April release from last year. And let's see, we got to move down. Only about 5 ticks against. And going to 1500. Pretty much moved up to close there, 6.7. About 10 ticks of profit, a little over, somewhere around 10 ticks of profit. Let's see, April, I think that was the one, if I'm right. Nope, that one actually profitable. Now this one, you got in right on the close there, and it didn't move against you a single tick, and then it ran up from, let's see, minus 12 up to, it ran 74 ticks in your favor. 10 o'clock, that was a big move for that day. 10 o'clock right there. Let's see, looking at the release and looking at 621. We had a move about 5 ticks against for a stop loss. Again, just thinking about, FX traders out there. But then as far as in our direction till 5 o'clock, or sorry, not 5, 1500, 3 o'clock, we're looking at about a 10 tick profit. Let's see here. So most of these are at least 1-to-1, even if you're on FX, if you're only using, like, say, 5 ticks as a stop loss. Going down to 10, 723. That one definitely pulled back. Let's see here. That was the definite loser, and, obviously it lost by about, 31, 50. Okay, about 20 ticks. It's about a 20 tick loss on that trade. It held to 1500. Pretty much finished on the low, 20 ticks down. So that was the one that we saw that was like, there's just no way around it. Let's see here. 10 o'clock, ran up, pulled back down, faded that, got about a 5 tick pullback, and then by 1500 there, it was up. Let's see, about 17 ticks higher. And looking at 924. We got a 10 o'clock move, and what we're seeing is that it had maybe a 3-tick pullback. Then by 3 o'clock, now I'm telling you, like, at 3 o'clock, some of these had, maybe a little bit more. But at 3 o'clock, let's see, 21, 26, about 5 ticks. So now in about 5 ticks. Looking on over at 1022, 10 o'clock. Again, about a 5-tick pullback, and then, but it does run up rather nicely on this one, all the way up to, let's see, it's not that massive, this looks bigger, about 15 ticks pullback, so in your favor, 15 ticks of profit. Looking over at November, we got our move down, so 10 o'clock. If you run that to 1500, that one was basically the break even. It moved about 5 ticks against you. It actually moved about 16 ticks in your favor, and then it pulled all the way back. Okay? So all these are assuming, by the way, that we're not taking profit. If you buy at 50, you could sell at 90, and a lot of these you would take profit. before you even got all the way to expiration. Or maybe you buy it like 60 or buy it 40, just barely out of the money, But just assuming buying at 50 and holding to expiration is sort of the model we're going off of for simplicity. Market runs up. It doesn't spike a single tick against you. And this is on December. And it moves down. Let's see here. Taking it to the 1500 there. We got about 28 pips. Actually, about 40 pips in your favor. Let's see here. And then January, so the last report that we just had. Market flies down. And then, depending upon how you traded this, it's flying back up. So it's sort of a tricky one. Let's just say you played the fade. You actually got a run up of about 40 or 50 ticks. So in pretty much every case, you should have taken profit on that trade. If you did the long, if you did the short, it would have went against you by about 45, 50 ticks, but then it would have finished in your favor. So if you went the short, being the opposite direction of the bar, then you would have been profitable. If you would have went long, if you had any take profit after a 40 or 50 take move on dollar CAD, you should have been profitable on that trade. So either way, that one should have worked out for you. 9 of them were just like no questions asked. One of them was on the line. One of them was a definite loss, and one of them, it sort of depends upon how you played it. So, but those aren't bad stats, especially if you're just, let's say, doing a 1-to-1, like risking 40 to make 40, risking 50 to make 50. So definitely not bad stats at all. And where it's at is probability. So putting probability in your favor. Profitability, where can I maximize my profit at? And then, of course, risk management, which is managing my position size, not putting on too much so I can afford to play tomorrow. So anyways, hopefully that gives you an idea. Look at what direction it's trending at 10 o'clock and on the dollar CAD, and just go the other way. So pretty simple trade for this. And I don't just go, okay, well, that's my trade every day from now on till the end of time on retail sales and CPI CAD. That's my trade right now. I'm going to keep tracking it. And if it continues to improve, I'll keep doing it. If it doesn't, I'll stop. But I'm going to dig in deeper and deeper and deeper on these reports. What about when it's negative? Do I see a bigger move when I see 2 or 3 negative numbers? What if I see 1 negative, 1 positive? So I'm starting to mix up all the combinations, track all these combinations. And as I start getting sort of all the combinations together, we can get better and better and better statistics, which tells us what did happen when this happened, and how often was that a consistent factor. So when these two numbers are negative, it consistently moves at least 50 pips. Okay, well there's a decent probability of expectation on that. Okay, how can I best make profit on that move? And, just trying to dig in step by step and see how to put it together so that way you can put it into practice. All right, stay right there. When we come back, we'll do one last intro section on a full topic, which is going to be putting together cross-currency straddles. Stay right there. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're coming back here to the Diagnostic Trading Hour. And, okay, so we went through a lot of little details. I gave you a couple ideas, gave you a pound-dollar trade on how to take advantage of that. I gave you an idea on the dollar-CAD trade on how to take advantage of it directionally. And last thing I want to go into with you is just how to do and this is really going to be an intro. We're not going to cover all this today. There's no way. But just to at least introduce the concept to you, okay, of cross-currency. And to do that, it would probably be easiest to I'll just pull up an Excel sheet, okay? And just to get the general concept, and we'll talk about this a lot more tomorrow, but take you back to the old days of algebra, okay? And A over B, okay? Times, B over, B over C. Actually, let's take this right there. Let's just merge those together. Put a big X right there. Okay? So times B over C, and we'll underline that one, so you're sort of seeing the formula. Equals what? Okay? It's going to equal A over C. Because the B's, okay, they cross out. Well, this is actually how Forex works. It's how what's known as triangular arbitrage works. It's how you actually make cross-currency pairs. And so I can even do this just to make it a little even more clear. And let's see, we got to have a strike-through option. There we go. So we'll format that one. We'll add a strike-through to that. Okay, so A over B times B over C equals A over C. If we take that to Forex, okay, then we can say Euro USD, or sorry, Euro. Let me make this larger now. Like I said, it's a semi-big topic. But Euro USD times, we'll just say dollar CAD equals Euro CAD. So if you bought the Euro dollar and you were going over and you were buying the dollar CAD also, well, if you bought the Euro dollar, you're long the Euro, you're short the dollar. Right? If you buy the Euro dollar, you're long the Euro, you're short the dollar. If you buy the dollar CAD, you're long the dollar, you're short the CAD. So if you're short the dollar when you buy the Euro dollar and you're long the dollar when you buy the dollar CAD, then you're long and short the dollar. Therefore, that's why the dollars cancel out. And you can actually go in and you can pull up the currency pairs. And this is actually, we'll build on top of this tomorrow. But you can pull up the currency pairs and you can go, what is Euro dollar times dollar CAD? It'll equal Euro CAD within a few ticks. Just do the bid-ask spread, okay? And that is the beginning of how to make a synthetic pair, which will actually open up like over a dozen additional currency pairs for you on Nadex if you know how to do this. All right, stay right there. We have another great show coming up for you, and I will see you tomorrow right here on the Diagnostic Trading Hour.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.